Here is a detailed summary of Sabre's Q2 2026 earnings call transcript, focusing on the requested elements. Good morning, everyone. Today, we're discussing Sabre's financial performance for the second quarter of 2026. Financial highlights and performance. Sabre delivered a strong second quarter, exceeding expectations and demonstrating positive free cash flow. This robust performance in the first half of the year has led the company to increase its full-year 2026 guidance for both pro forma adjusted EBITDA and free cash flow, while reaffirming its outlook for revenue and air distribution bookings growth. Revenue. Total revenue reached $712 million, a 4% increase year-over-year, surpassing the company's guidance of flat to nominal growth. Marketplace revenue grew 6%, driven by a 1.5% increase in distribution bookings and a 4% increase in average booking fees, bolstered by growth in payments and media offerings. Airline technology revenue was $135 million, aligning with expectations. Normalized adjusted EBITDA. This key profitability metric showed significant growth, increasing by 19% year-over-year to $151 million. This exceeded the company's guidance by $21 million, with about two-thirds of this outperformance attributed to higher gross income from increased average booking fees and bookings. The EBITDA margin expanded by 272 basis points to 21.2%. Gross margin. The gross margin for the quarter was 57.1%, landing at the high end of the company's 56% to 57% range. This was primarily due to favorable average booking fees and revenue growth in higher-margin payments and media products. Free cash flow. Sabre generated positive free cash flow of $10 million in Q2. The company has now increased its full-year free cash flow expectation to approximately negative $65 million, an improvement from the prior guidance of negative $70 million. This negative free cash flow is largely due to approximately $60 million in restructuring costs related to their inflation offset program. Without these costs, the company anticipates near break-even free cash flow. Air distribution bookings. Bookings grew by 1% year-over-year, exceeding expectations despite headwinds from the Middle East conflict and higher fuel prices. Since late 2025, Sabre's bookings growth rate has been outpacing the broader industry by approximately 600 basis points. Management's forecasts and future outlook. Sabre's outlook for the remainder of 2026 remains positive, with key areas of focus and updated guidance. Full year 2026 guidance. Pro forma adjusted EBITDA increased to approximately $600 million. Free cash flow increased to approximately negative $65 million. Revenue growth and air distribution bookings growth reaffirmed. Gross margin expected to trend slightly more favorably than prior expectations. Capital expenditures. CapEx increased by $10 million. Q3 2026 outlook. Air distribution bookings and revenue expected to grow in the flat to low single-digit range. Normalized adjusted EBITDA expected to be approximately $155 million. Gross margin expected towards the higher end of the 56% to 57% range. Adjusted technology expense sequentially higher than Q2. Adjusted SG&A expense sequentially flat. Q4 2026 outlook. Air distribution bookings and revenue expected to grow at a low to mid-single-digit pace. Normalized adjusted EBITDA expected to be approximately $125 million. Gross margin similar expectations as Q3, towards the higher end of the range. Adjusted technology expense sequentially higher than Q2. Adjusted SG&A expense sequentially flat. Airline technology revenue expected to be between $140 million to $150 million per quarter in Q3 and Q4, with year-on-year revenue growth expected for the full year 2026. The company anticipates strong momentum extending into 2027. Agentic AI. Sabre is increasing investment in AI initiatives and is positioned to be a leader in the emerging agentic AI travel channel. They have seen significant engagement with developers, with over 60 active pilot and production partners utilizing their agentic APIs and MCP server. Significant risk factors: Middle East conflict and geopolitical events. The ongoing conflict and other geopolitical events continue to impact global travel demand, particularly in EMEA and Asia Pacific. Sabre estimates a 300 to 400 basis point impact in Q2 from fuel prices and the conflict. Fuel prices. Higher fuel prices are driving airline fare increases, which can affect travel demand. Competitive landscape. Concerns remain regarding Amadeus' market position and potential anti-competitive behavior in the offer, order, settlement, and delivery (OSD) market, specifically relating to data access, API limitations, integration costs, and delays for airlines. Timing of technology investments. Investments in technology, including AI and product development, are weighted more heavily in the second half of the year, impacting short-term cash flow. Restructuring costs. Approximately $60 million in restructuring costs for the inflation offset program are impacting free cash flow in 2026. NDC dilution. While NDC volumes are growing, they can be slightly diluted to revenue and margin, especially in Europe, though Sabre's global exposure to this impact is relatively lower than competitors. Key highlights: strong Q2 performance, beat expectations across revenue, normalized adjusted EBITDA, and free cash flow. Increased full-year guidance. Significant upward revision for pro forma adjusted EBITDA and free cash flow. Agentic AI leadership. Sabre is investing heavily and positioning itself as a critical infrastructure provider for the next generation of AI-powered travel commerce. Developer ecosystem growth. Doubled active pilot and production partners for agentic APIs and MCP server. Marketplace momentum. Hotel revenue accelerated to 11% growth, with an improved hotel attach rate to approximately 35%. Payment suite gross spend exceeded $6 billion in Q2. Airline technology wins. Secured a significant new technology platform provider agreement with a notable carrier in Africa, migrating its core passenger services to Sabre. Financial flexibility. Extended their accounts receivable securitization facility through September 2029, with no maturities until then. Corporate booking resilience. Corporate volumes demonstrated steady performance, offsetting leisure softness. Lowlights. Continued headwinds. The Middle East conflict and higher fuel prices continue to create headwinds for air distribution bookings, although their impact is expected to dissipate. Negative free cash flow. While improved, full-year free cash flow remains negative, primarily due to restructuring costs. Most important statements from management. Kurt, President and Chief Executive Officer. In the second quarter, we delivered results ahead of our expectations and generated positive free cash flow. Importantly, with the strength we've seen in the first half of this year and our outlook for the remainder of the year, we are increasing our full year 2026 guidance for both pro forma adjusted EBITDA and free cash flow. We believe Sabre is positioned to be a winner in the rapidly emerging agentic AI travel channel, and we are working with partners and leaning into our leadership position by increasing the level of investment in AI initiatives. Agentic AI is no longer just a future opportunity. It is transforming how travel is bought and serviced, and Sabre is leading that evolution. Our open platform enables AI agents to shop, book, and service travel autonomously, securely, and at scale. The industry is looking for modernization, for airlines to deserve equal and unequivocal access to best-in-breed, modular, open, AI-first cloud solutions, and Sabre is marching down this path. Mike Randolphi, Chief Financial Officer. Second quarter revenue, gross profit, normalized adjusted EBITDA, and free cash flow all exceeded our expectations. As a result, and based on our current outlook, which is consistent with our prior view for the second half of 2026, we are reaffirming our full-year guidance for revenue and air distribution bookings growth and increasing our full-year guidance for both pro forma adjusted EBITDA and free cash flow. Our normalized adjusted EBITDA result of $151 million was favorable to our guide of approximately $130 million by $21 million. Approximately two-thirds of this outperformance is attributable to higher gross income. As a reminder, the negative free cash flow this year is driven almost entirely by approximately $60 million of restructuring costs associated with our inflation offset program. Absent these restructuring costs, we would expect near break-even free cash flow. As Kurt mentioned, the trends we saw in June continued through July. Based on our current outlook, we anticipate third quarter air distribution bookings and revenue to grow in the flat to low single-digit range, and fourth quarter air distribution bookings and revenue to grow at a low to mid-single-digit pace year-on-year. In summary, Sabre had a strong second quarter, exceeding expectations and demonstrating significant year-over-year growth in key profitability metrics. The company has responded by increasing its full-year financial guidance, particularly for pro forma adjusted EBITDA and free cash flow. A major focus remains on their strategic investment in agentic AI, where they believe they are well-positioned to lead the industry. While headwinds from geopolitical events and fuel prices persist, Sabre's execution and positive trends provide a solid foundation for sustained growth.